let's dig in. So you are with Calvert Mortgages. Now, Calvert, we've known Dale for, I'm going to say, closer to 20 years, most probably. Let's hit it. Let's get some of this info going. You guys, if you're doing BRRRRs or want to be, and you're just finding the financing really tough or getting the private money in order to do the BRRRR to then move on into, whatever, refinance or whatever, these guys have got a really good system for making it pretty seamless. So
awesome. And sorry, was that question for me? Is our lending based on current appraised value?
Yeah. Is it current appraised or after appraised? I think is probably.
Yeah. So what makes us really unique is we lend on the after repair value. So we take into consideration the borrower's renovation plan, what they plan on doing to the property, the budget that they have in place, and we will assign a value to it. We have 2 candidate in-house appraisers who are licensed appraisers, and they pump out these values all day, every day. They're extremely accurate with their valuations as well too. And not only is that advantageous to the borrower in a few different directions, but if they are a little bit newer, then it's almost a gut check and a sense check on, is their deal going to be profitable? Just because we do have industry professionals taking a look at their renovation plan and their renovation summary, pulling comps on a direct comparison approach, and ensuring we're comparing apples to apples on what their product's going to look like in the end value in order to give them the most accurate valuation as possible.
Awesome. Okay, so Marie, they finance your BRRRRs. Let's repeat this because this is big. They finance your BRRRRs on the after repaired value. So that is totally different than what we see anywhere else. And so is it, impossible to get one of these mortgages on the ARV, or is that just part of your daily business that you guys are used to doing?
Yeah. So how we determine loan to value is the net mortgage. So say if you had a purchase price of $400, for example, minimum we require is $20,000 down. So on closing date, we would advance $480. We can get into a little bit more detail as well too. So all of our loans in Ontario have a minimum 2% financing fee. So that's built into the mortgage as well too, which is another value proposition that we have that's quite unique, is you don't have to pay the financing fee, which is industry practice for private lenders. That's built into the mortgage, and then it's divided by the after repair value. So the formula for loan to value at Calvert is the net mortgage plus the financing fee, because you pay that on the back end, divided by the after repair value.
So yeah, there's 2 massive differences between you guys and industry norms right there, where you guys include the financing fee or the lender's fee in the mortgage, so it's not out of pocket. And you go on after repaired, not before. So that's fantastic. Again, and we'll get into your presentation right after this, but what length of time do you lend for?
Ideally, it's a year or under. We write up all of our commitment letters for 6 months fully open. So if you're in and out, and hypothetically, we have some borrowers who do wholesales. So they get a private deal. They don't do any renovations. They just list it on the MLS because they buy sharp. You're charged daily interest. So if you're in and out in 10 days, you're charged 10 days interest and the 2% financing fee, no other discharge fees, no other prepayment penalties. If it goes over 6 months, we renew at no cost, as long as the borrower is making mortgage payments.
Amazing.
No prepayment penalties, fully open, you're in and out, time is of the essence, get in and out, right when you get possession, do the rentals as quickly as possible. Quite honestly, yeah, everyone makes more money, the borrower specifically, when you're in and out in a timely manner. And then what else makes us different is we have 24-hour commitment. So especially in very, very competitive markets, as what we're seeing in Ontario, I know quite a few people are in BC as well too. Time is of the essence for submitting offers just because it is so hot. So once you're pre-approved, that takes 24 hours. I can give you a response if the borrower sends me the MLS listing or the buyer's package, if it's an off-market deal, the renovation summary. I'll do an internal valuation with our candidate appraisers, and we can give you a commitment within 24 hours. So then you have reassurance and essentially peace of mind as well too, going in, if you are going in with conditions waived, not having that financing condition. So again, as well too, huge advantage. We don't have voice. Well, we do have voicemail, but what we mean by that in our value proposition is if I'm not available, we have 5 other underwriters, whether it be myself, Garrett, Rob, Sherwin, or Jesse there, who are going to make themselves available so we can answer your questions, so we can give you an answer to go in, ideally unconditional, with time being of the essence. Yeah, something really unique that we do in Alberta as well too is we have in-house signings. So borrowers are able to save on legal fees as well too, because we do have legal in-house administration. Again, that's only in Alberta. We're working on solutions in Ontario as well too. So if you are in Calgary, we can do in-house signings. And as mentioned before previously, we have no renewal fees. So as long as borrowers are making their mortgage payments, and again, like we're here to create relationships and solutions. So some of our top flippers, they really leverage that minimum $20,000 down in Ontario and $10,000 down in Alberta, and they scale up their business. Whereas opposed to investing all of their capital in one BRRRR or one flip, putting 20% down if they're going to have, $50,000 to $100,000 reno, it's so capital intensive. This way, you could do 2, 3, 4 flips at once, really scale up your business because we don't focus on debt service ratios. You will be paying more interest that way, but the way we look at it and some of our top flippers look at it is, if you're paying an extra $2,000, $3,000 a month in interest, what's that to your bottom line when you're going to be making another 20, 30, 40,000 by capitalizing on another flip?
Yeah, for sure. To be able to do multiple projects at once without having to worry about the financing, for sure. Lots of power in that.
Exactly.
So just to be clear, guys, so right now Calvert does finance mortgages and all these kinds of things. They do it in Alberta, in Ontario, and they'll soon be in BC. So those are the 3 provinces that they are in. So it depends on where your project is, whether or not they can finance for you. So Sylvie, who wasn't able to make the presentation in Ignited, do you fund multi-BRRRRs, so over $1 million or over 5 units?
Yeah, so the most we'll lend on one property is 1.5 million. There are exceptions if you do have a track record, if you have a portfolio of properties, if you have some experience flipping, but generally that 1.5 million is the max we'll lend out on one property. Our bread and butter is 4 units and under. With that said, we will take a look at some of the bigger multifamilies, kind of ideally 10 units and under. And something that I forgot to mention as well too. So for the single family stuff, we do not require appraisals. So not only does that save you a few $100, also time. Appraisals are backed up, a week, 2 weeks, especially if you have something time sensitive. Not needing that appraisal can sometimes, from what we've seen, make or break a deal. With multifamilies, we would need an appraisal though.
Okay, so with multifamily, you need the appraisal, but with single family, you don't need an appraisal.
No appraisal.
You lend on the after repair value, you give same day commitments, and you can fund within 48 hours quite often. So, I mean, already this is amazing. Oh, yeah, and there's more coming. Marie says, do you have a limit on how much you lend to a person or a company?
We do right now. So my top flipper, he has $5 million with us out at once on 11 different projects. So that is kind of the maximum threshold. We're looking to extend that. We just got a $150 million line of credit from BMO and TD. So we are looking to lend out more money just with the volume of business we're doing. Currently, we have $219 million assets under management. But if you have a strong track record, you have some case studies, you can send us some before and afters, the profit that you made on that. Everything is relationship based. So feel free. I'm always available to talk and chat. Absolutely love real estate. $5 million is kind of the cap for now.
Let's get into some of this stuff. You have some pretty good parameters, very clear parameters for what you do and do not lend on. No guessing, which is fantastic. At the same time, you're balanced in that you will do case by case looking at scenarios. So Dale's been an investor long enough that he knows that everything doesn't fit into a box. But I do like your boxes. So let's go over those.
For those who are interested, I'd highly recommend if they do want to take a screenshot of it, because this is very kind of nitty gritty what our lending parameters are. So ideally, we like lending in major city centers. So in Ontario, kind of southwestern Ontario, Kitchener, Waterloo, Guelph, Ottawa. So any populations above 100,000. The smallest populations that we do lend in are 10,000 population within city limits. So, if it's just outside of Ottawa, say if it's a smaller town, as long as it's has a population of 10,000 people, we would love to be involved. We don't have any minimum loan amounts. No loan is too small. However, with that said, we do have minimum lender fees. So you kind of got to take the approach on what's kind of the best use of my capital from a borrower's perspective. Like if you're only going to get a loan for $100,000, our minimum lender fees are $1,500. So you just got to take that into consideration as well too. For those of you who do lend who do borrow in corporations, we love borrowing to we love lending to corporations. It doesn't matter to us. You can be borrowing in your personal name or in a corporation. We just need to see your articles of incorporation and year-end financials.
All right, let's repeat that one too, because we've already had to repeat at least 4 or 5 points of what makes you guys so different and so handy for us as investors. But let's repeat that one. You lend to corporations.
Yes, no problems. No problems.
Woo! Right there, guys. Like this stuff is so great. Vinny's asking, do you lend on acquisition for land development under 1.5 million?
We're not doing land development currently right now. We do a little bit of it in Ontario. We're starting to shy away from anything land development or construction. Reason being, it's really hard to manage. So whenever we do kind of construction loans, there's a lot of milestones that borrowers need to reach in order for us to release funds. So kind of once like framing's up, we'll release another 150 grand and kind of so on and so forth. So right now we're just focusing on the flips. Flip lending and BRRRR lending is kind of our main focus. Perfect. So yeah, details. Our focus is single family market average homes. So anything below or at market average. The reason why we're focusing on those properties is just because they turn the most. We've had a few people try and flip high end, very luxury homes. We find that typically on average, those borrowers sit on the properties for a little bit longer just due to the market for those type of properties being significantly smaller than market average homes. You can submit a deal through to myself, just to my email. It's ryan@chmic.ca. The minimum we require down is $20,000 down for purchase prices up to $800,000. Purchase prices over $800,000 will require a little bit more down just due to loan to value constraints. It'll be in and around 5 to 10%. So that's kind of in the bottom left tab there under details.
So if it's over 800, then you've got like a percentage. But if it's under 800 in Alberta, you are fine with 10,000 down for flips. And in Ontario, $20,000 down for flips doesn't base on percentage.
Correct. That's correct. Yes.
Pretty darn cool.
Mm-hmm.
Awesome.
For those of you who are familiar with second mortgages, it's a very creative way if you have equity in your house that you aren't able to tap into or utilize. We have done zero money down deals. I'd love to get into a mock scenario, maybe future down the road. If you'd like to bring us back on, we could do a case study. But we do second mortgages at 75% loan to value. And we will advance you funds for the renovation, down payment, carrying costs, operating costs, and get in with zero money down. So quick example, very easy numbers. Say if you had a property worth $1 million, it's in Toronto, 75% of that is $750,000. Say if you had a mortgage for $500,000, there's $250,000 of equity that we could tap into there. If your total project for your down payment, renovation costs, carrying costs, and operating costs was say 200 grand, for example, we could advance you $200,000 on closing day, give you our cheapest money as well too, in order to get in at those zero down options. However, you do need to have a little bit of equity in your property in order to do that and accomplish that. But we're in the business to create solutions for strategic real estate investors.
And, that's the thing with, that Dale's kind of been known for all these years is, he doesn't just blanket investors or, properties or markets or people even. He kind of, he looks at every case and kind of goes, okay, well, does this make sense? Like, okay, you want us to finance this, but it's got this going on. Okay, well, does it make sense to have that going on? And it does. Okay, well, in that case, we're okay, instead of saying it doesn't fit in this box. So, it's pretty awesome what you guys have to share. So, is it the 75% on the appraised value or the ARV?
So it'd be on the as-is value. So if whatever condition the property is in currently right now that we're taking as security. So say if you have a primary residence, it's in Toronto, we would blanket that on as is, 75% loan to value, and we would advance you funds or give you a reduced rate for the property that you're flipping. So there'd be two properties in this scenario, just to be clear. Yeah.
All right, let's see. What do we got going on here? Here's the breakdowns of the numbers and the interest rates that you guys charge based on different parameters, which is also great because if we have the flexibility, which some of us do, some of us don't, then we can negotiate with those rates, which is great. Not negotiate, but we can get different rates.
Yeah, exactly. So again, these are annualized rates. So obviously it can be a little bit hard to digest, especially for the minimum down payment options. But if you're only putting $20,000 down in Ontario, for example, you have a purchase price 600, 700, 800. That's definitely going to come at a premium. So that 15.5% in Ontario is 1.29 per month. On average, we typically see our flippers in our mortgages from 3 to 4, 5, 6 months. It definitely depends on the scope of the renovation. If they're going to be tearing down walls or if it's just light cosmetic, just doing paint, baseboards, flooring, stuff along those lines. Our cheapest money in Ontario is $799 at 25% down. And Ontario, it's a little bit more expensive at $899 at 25% down. And again, these are fully open. So if you're in and out in 15 days, you're charged 15 days interest and the 2% lender fee. In Ontario. In Alberta, our lender fee is 1.5%, and that's built into the mortgage as well too. Something that I definitely like to stress: you do not pay that out of pocket up front. You pay that from your profits when you flip these properties, or in the cash out refi or in the refi, sorry, for BRRRRs.
Many of us are seasoned flippers and that in this group, but there are some that aren't. So let's just talk about for a minute the difference between, why that matters is that this is an annualized rate. So many times if we borrow money, guys, we have to say like, look, we're going to borrow it for 6 months. Now, if we get it back to them in 4 months, doesn't really matter. Our financing fee stays the same. We promise them 6 months worth of interest. They expect that 6 months worth of interest. The difference with these guys is that they're saying, listen, we're going to have an open contract. So you're going to borrow that money. If you keep it for a year, it's going to cost you 15% or whatever it might be. But if you only keep it for 4 months, we're going to charge you 4 months of that interest. We're not going to charge you the full 6 months, year, 9 months, whatever you committed to. So the flexibility in being able to have some, give and play. I mean, normally we have to count on worst case scenario, and that's what we budget into the numbers. In this case, you still budget those worst case scenarios, but hey, at the end of the day, there might be a little bit of money, left over in there, and that's just fantastic. So Robin's asking, is the Alberta lender fee 1.5 for any amount?
Yeah. So say if there was a mortgage for 60 grand, for example, our minimum lender fee is $1,500 regardless of what the loan is. So no matter what worst case scenario, you're going to be paying $1,500.
Yeah. And remember, guys, that $1,500, they roll that into the mortgage itself. So it's not cash out of pocket and advanced like we normally see in lending fees. It's actually rolled into that mortgage and it's financed as part of the deal. So again, right, less money out of our pockets is always going to be a good win.
So this is our Excel spreadsheet. Happy to share this with everyone in the audience. This is like an underwriting tool that we use. It's very interactive. It can seem a little bit daunting at first, but it's a phenomenal tool to input and see what your flip project will look like in terms of profitability. So we have all of the costs associated with purchasing a property over here, selling a property with realtor fees, operating expenses, typical electrical, gas, insurance, property tax, if it's a condo fees. All of these are pretty kind of set variables. If you'd like to get into the nitty gritty, just because on a property by property basis, these will change. However, this is what we have set for our borrowers as a kind of as-is basis from what we see in the market as well too. This is an Ontario example, so they're going to have land transfer tax. We highly encourage inspections as well too. So all of the variables, whenever you're assessing a flip deal, you're essentially going to populate the months to renovate. So we can use a random example. Say it'll take 4 months to renovate this property we're looking at. We're going to say, be very conservative. It'll take 2 months to sell in Ontario. Our renovation budget for this example, we'll do $25,000. And you can see all of the numbers and variables update in real time as well too. We'll say we'll purchase this property for 700 grand. We think the ARV on this it's going to be 910. So with the minimum $20,000 down, obviously it's going to be quite expensive. If we wanted to do down payment at 20% and the rate would be 899. You can see how all these variables are very user friendly, and you can see, depending on how much capital you have available, what profitability would look like and what would make most sense given your borrower's situation. So in this example currently, I'll zoom in so it's easy to see. The profit on this example flip, the borrower would be making 80 grand. The total cash needed for this project, because it is a higher down payment, would be 209,000. Where we get those numbers from, you just double click the formula. You have your monthly interest only payments for 6 months. This is quite a long flip. Down payment of 140, reno for 25. You have your closing costs, primarily due to land transfer tax and legal fees. Operating costs for 6 months at around 3 grand. So that's how we get to that number. And it breaks it down in a very digestible way where you can see your return on cash invested. Normally what we see that comes across our desk is around a 30 to 33% return on cash invested. And that on an annualized rate for this example is 77%. And it's very transparent, this Excel formula as well too, for how much you're going to be paying in interest payments a day. This is what your mortgage payment will be. This is our lender fee and total financing costs as well too. So it's everything's all right in front of you. So there's going to be no surprises whenever we issue a commitment letter. This is what you're going to be paying. And you're able to modify this as you see fit. Something that we really, really like pointing out is your monthly variable costs. You want to get in and out as quick as possible. So your burn rate on this is around $4,800. So if this takes one additional month, you're going to be making 75 grand. If it'll take 1 month less, so 5 months, you're going to be making 85 grand. So you're going to be making an additional or lose an additional $4,800, depending on if it takes you 1 month longer, 1 month less. Yeah, this is completely free. There's also a tab in here to help you with your renovation worksheets. We have an example in here as well too on budgeting for a renovation. We always recommend having in a contingency fund of around 30%. You know, we have material costs that are inflating. They can't get the materials in time. Projects are taking an extra 1 to 2 months because of this. Tradespeople, if you don't have reliable tradespeople, you know, maybe they're off for a few days, few weeks, stuff along those lines. So more than happy to share this tool with the audience there.
And you know what I really like about that is that that's how you guys analyze. Like the reason that came about was very organic, is you guys, that's how you analyze whether or not you're going to fund. So if you guys come back to us and say, hey, listen, we're not going to fund this flip, the numbers don't look good enough, or the bird doesn't look stable enough and it's just not going to work and we're not funding it, that's a huge sign, if you ask me, to say, hey, listen, these guys don't see the upside in this. You know, what am I seeing? Why am I seeing an upside in it? So, you know, really looking carefully at, you know, the analysis is, it doesn't lie. So what else do we got here? Yeah, this is so simple. The submitting of a deal for approval.
We like to think not opposite, but almost opposite of a bank. We want to be it as seamless as possible and the minimal amount of paperwork as possible too. So what we recommend is to get pre-approved with us. What that is our 1-page application and your 2020 notice of assessments. What we're looking for in your notice of assessments isn't so much income that you're making, you know, a lot of money. We just want to ensure that you're all up to date on your taxes. The reason why we're so cautious with taxes is just because, you know, in a worst case scenario, it rarely ever happens. But if you do owe a bunch of taxes, we need to go in foreclosure. The CRA will supersede us in payout. So the CRA will get their money before the lenders. And then we'll just be doing a credit pull as well too. Just to understand what credit's like. Don't need to have a perfect credit score. We can understand life happens. We have lent to people before in the 500s as well too. As long as you have the capital for the project, we have confidence in your business plan. You're going to be making money on your flip. It's in a good location. I don't see any reason why we wouldn't lend, as long as the business decision makes sense. And once we have your application entered away in credit, we only need that once a year. So once that's all done in the system, everything else is deal related. So it's essentially just the MLS listing, or the buyer's package if it's an off-market deal, proof of funds, and a summary on what you're planning to do to the property. We'll value the property as if complete. We share all of our valuations with our borrowers as well too. So you'll be able to see in real time what adjustments were made if another property had a bigger lot size, if they had a double car garage versus single car garage, and the adjustments that were made on that as well too. So we're very, very open with our valuations and appraisals, and we're more than happy to walk borrowers along to understand the method behind them, how we came to this valuation and what adjustments were made to essentially educate the borrowers as well too.
Yeah, which is awesome because, lots of times part of the, hold back in getting into something is, for one, not knowing the outcome for sure and not knowing what you don't know. Whereas with you guys, you're kind of coaching them along and saying, hey, listen, this is why you have to watch for this. And it's in your best interest because you want your money back. And it's in their best interest because they're getting good advice from people that are doing this, every day. So I was just going to throw this up here. So looks like it's from Jeff Walters. Thanks, Jeff. Nice throw. Used Calvert twice now. Amazing group to work with. And, that's one thing that, Dale's been around for so long. And that's one thing I stand by. And we say this a lot that, it's easy to get into business. It's easy to start up. It's easy to do that. But, when you've been in business for 20 years, so 46 you said he's been in, but yeah. We've known him personally for 20 years, and that reputation that stands so tall and is still good after 20 years and millions of dollars or maybe billions lent, I don't know, and tons of transactions with investors that we know. I mean, that alone right there just speaks volumes. So yeah, really happy to be connecting with you guys a whole lot closer. We used to work closer with you guys before, and just kind of moved away from it. But now, man, I'm more excited about all this than you are, I think. So, okay, so submitting a deal is super easy. It's a one-page application. That alone sounds fantastic. All of these things are fairly simple and fairly fast, which is why you can get back to us within 24 hours because it's not a whole whack load of paperwork for you to be reviewing either. Simplicity is good, right?
Exactly. And for proof of funds for our deals as well too. So say if we needed to see proof of funds for $100,000, that can come from multiple accounts. It can come from lines of credit. If you have a joint venture agreement, we accept joint venture agreements. If you have capacity on your credit cards, not everyone has the cash available. So if you have capacity on your credit cards, you can advance that. The numbers make sense, even with advancing funds from your credit card, that's okay as well too. We really just want to help borrowers find solutions that's in their best interest, that they're going to be making money while still questioning and challenging their business decision of doing this. But we like to view that as, we're creating value to the borrower because we're ensuring that for the renovation that they plan on doing, it's the best renovations that's going to increase the property value. It's not going to be too capital intensive. They're going to be able to sell it quickly because it's in a desirable market and a really good community, and that they have the funds to do so, and that they're going to be able to service our debt. So any questions at all, we really, really love just helping people get into the real estate market. And we're more than willing to share resources, bounce ideas off one another, challenge their business ideas. If they have, two options on the table, hey, I'm looking at doing this duplex conversion, or I'm just going to do 2 light cosmetic renos on these 2 single family homes. Can you do your evaluation on what you think the ARV is? Those valuations as well too are free for borrowers. We don't charge for those. So there's just so many different avenues and small different value propositions that definitely can compound as well too. But like you were saying, it's working for Dale and them, having that reputation for over those years, it's why I started working for the company from someone who wasn't
for sure. So let me just kind of review that again, and just to be really clear for those that aren't familiar with how it normally works, the fact that their proof of down payment can come from almost anywhere. It can come from RSPs. So they don't have to know that you have cash in your bank account, but they have to know that you have the assets to cover what you're saying. So even your RSPs can work as collateral for your proof of down payment. A JV agreement can work, your line of credit, a credit card. Here's also something, guys. This is beautiful. One thing that we learned, before and ignited from you guys is that you also don't care. So if I have a joint venture partner, generally speaking, the bank wants to see that money's been sitting in their bank account for 90 days. How do you guys feel about that? If there's joint venture partners and one person has the money and one person didn't and all that stuff, how do you guys feel about that?
Yeah, so we like to get the joint venture partner, the silent partner, on the phone, and we just want to do a gut check. Like, ask them where the funds have been. Sometimes we'll ask for a recent bank statement. We just want to ensure that we're complying with all the regulations. We don't require a minimum. So if you did get, a transfer for 100 grand the day before, we will still consider that valid, but we will be kind of sussing out just to ensure that everything is legal as well, too.
Everything's on the up and up. Which is perfect, because that's what we should all be doing. So now let's say everything's on the up and up, everything's looking good. Most lenders, most financiers will not accept the money, unless it's been sitting in a bank account for 90 days under that person's name. It can be tracked where it came from, all of these different things. And you guys are saying, we don't care if it's a credit card, your RSPs, a joint venture agreement, your account, his account. We just want to know that the money's there and that it's legit.
Exactly. That is it.
Huge. That's massive difference. It's a game changer in our world. So I don't know about you guys, but I'm freaking excited. I don't know if you can tell, but yeah, it's just awesome stuff. All right, let's get back to what do you got going on in your slides here?
These are all of the contact details. I'm just at the bottom there, Ryan. But if you have any questions, comments, if you're looking for industry partners as well, too, we have a list of phenomenal wholesalers that we have partnerships to find deals. If you're looking for realtors, accountants, like anything under the sun to build your power team as well, too, we have those relationships. More than happy to make introductions as well. But yeah, these are all the underwriters that we have on our team. Dale isn't involved too much on the day-to-day basis, so I probably wouldn't reach out to him. But anyone else on that list, more than happy to get on a call with anyone. Shoot us an email. We can send you a summary of our lending parameters, our rates, terms, all that fun stuff. And if there's, any other questions, more than happy to answer them.
We do have one question here. When will you be in BC? I know it's a big one.
Yeah, we're doing our market research right now currently for BC on what our lending parameters would be and just legislation and legalities. Probably 9 months. So to be on the conservative side, I'd probably say near the end of next year.
Okay. Mm-hmm. And I mean, we're all like, what? No, come quickly. But at the end of the day, it comes down to you guys have to comply with all of the legislation that's going on, and in every province you have to comply with all of that. So not only do you have to figure out what it is, but then also, as we saw, you have different standards for different provinces. In Alberta, we put $10,000 down on a flip. In Ontario, it's 20. There's different interest rates for different projects. So as much as I think, like, come on, just get on out here, at the same time, it's good that you guys are making sure all those T's are crossed and those I's are dotted. So it's good. Okay, will you finance for a personal residence BRRRR?
So I'm assuming, do they already own it? They're looking to buy a personal residence with, one of our options, then refinance out to an A or B lender, and then that'll be their primary.
Well, let's ask him. Let's give him a minute on that. We'll go to the next question. Tyson, if you want to clarify on that, let us know. Nand asks, do you finance cottages? I understand you have that minimum of 10K population for a market. If there was cottages within that, would you finance those?
Yeah, those are tricky. We will take a look at it. Everything's kind of on a deal by deal basis. So if you have a sound business decision, you have the funds to do it. We need to dive deep into the location. We need to see the property type, and we need to understand the exit strategy. Like if they're going for a refinance, we dig into the refinance ability. So what's their debt service ratios? How leveraged are they? Do they have a portfolio of properties already under their personal name, which could jeopardize another refinance as well, too? What's the scope of the renovations? Is it going to be, are they tearing down a bunch of walls and doing a duplex conversion, or are they just putting in paint, flooring, trim? So we will take a look at everything, but it isn't our focus. We have done them before, but it's maybe like 1 or 2% of our book.
And good to know. I love the transparency and just, hey, I don't like yes men, so people will say yes to everything. Well, it's just, it's good to say, sorry, these are our parameters. So that's good that you guys have them so clear. So Tyson says, we would purchase a new property, we'd renovate it, refinance it to a lender, and this would be for personal use. Do you finance that?
Yes.
Okay, so using $10K to secure the loan, is there any way to use my own RSPs or someone else's to get extra money for the renovations?
The only way we can advance funds for renovations is if you already have a property that you own that has a decent amount of equity, and doing that second mortgage or that blanket mortgage. That is the only way we could advance you funds for renovations if you already have a property that we could tag as security.
Okay, so that wouldn't be using the RSPs that he's asking about, but that would be basically just using equity in another property to finance
the renovations
on this one. Okay, makes sense. Yeah, awesome. Just as for getting a hold of you, again, they can contact any of you guys by email other than Dale, really. We also will be sharing the spreadsheet here. We'll share it in this feed. If you're on the replay and you'd like it, just say yes, please, or a spreadsheet or whatever you'd like to say in the chat, and we'll make sure to get that to you as well. And we will also post it as an original post in Fearless tomorrow so that everybody has access to it. This really lets me think about flips in Calgary. And that, Ryan, to me, how you said we just love helping people get into the market. To me, this is what's amazing about what you guys are doing is you're opening doors to people that otherwise are going, okay, I can't qualify. I don't have the funds. I don't even know how to analyze it right now. So obviously I can't do it, but I want to. And you're saying, here's a tool so you can analyze it. Don't worry about the funds, and we'll look at your deal and make sure it's safe for you. I mean,
you can't get much better than that, and provide you all the tools, resources, industry professionals that we have at our disposal from Dale's lifetime that he's been in the business as well too. It's tough to compete with that.
Yeah, and let's talk about, you guys have a special offer for our Fearless members as well. So you want to tell us a little bit about that?
Yeah, you bet. So as mentioned before, we do have lender fees. So we are more than happy, more than willing for all of you fantastic individuals in the Fearless community that will give you $500 off our lender fees. So that's the fee that's built into the mortgage paid when you sell or refinance. Just reference Tiffany in the Fearless community, and you'll get $500 off, which can definitely add up in a flip to save on your lender fees.
That's amazing. Thank you so much. So if, we talked about how if you borrow a smaller amount, you still have to pay the minimum of $1,500. So now in this case, it would be a minimum of $1,000. That makes a big difference. So, just awesome. One question here, Marie, and maybe you can clarify, but does the borough have to reside in the province, or is it just important what province the project is in?
Yeah, so phenomenal question. So we only care about where the property is located. So if you're in Victoria, BC, you have a flip project in Calgary, you've asked us, hey, Ryan, I need a property manager, I need a general contractor. We're more than happy to give you those resources. So as long as the property is located in the province that we lend in, no issues there.
All right. And a similar question from Adrienne. She's from Halifax, but she's saying, hey, if I'm buying in Alberta or Ontario, but I live in Nova Scotia, is that okay? So same answer, right?
Correct.
All right, guys. So thanks, Ryan, for coming on. Awesome stuff. I'm just going to really quickly recap because this is craziness. So same day approvals, 48-hour funding, and that's actually legit. It actually happens. Flips a minimum of 10,000 in Alberta, not based on percentage, but just 10 grand down. In Ontario, 20 grand. You land on the wholesale fee if you're a wholesaler, and that's amazing too. It's 1.29% in Ontario per month to be doing this. It's an open contract, so you're not having to, pay out the whole amount if you're extra good and you get done sooner than you thought. Beautiful, awesome. Proof of funds does not have to be in your account. They don't even care. You can have it be from a credit card, a line of credit, a joint venture agreement, your RSPs. I should have written actually more. Oh, you finance on the ARV, not on the
Yep.
appraised value today. Seriously, you guys are game changers. So thank you for providing it, and thank you for coming on today and sharing it.
Really appreciate it, Tiffany. Great to meet everyone. And yeah, thank you very much for the time, and looking forward to connecting in the future. And if any other questions come up, email is definitely the best way to reach me at ryan@chmic.ca.
Perfect. All right. Cheers. Take care.
Thank you very much. Enjoy, everyone.